The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the last one for the year because tomorrow we're having off here at TFNN, but there will be a market that's open and we'll come back right here on Tuesday. Well, let's do a kind of a wrap up here. We'll just run the numbers real quickly, and thank you to Tom and the others for the great opening couple of sessions, and we'll be going all the way through today when Tom wraps it up at 5 o'clock. Wednesday, Thursday, at Andy Hecht, I think we'll finish it up at 6. So let's go through the numbers. The E-mini is down 225. It's made a peak D at 2273 in the daily chart. Rectangle formation. I consider this to be a distribution type pattern. And it just says simply that if the E-mini starts to trade at 2239 or lower, then you're on your way to a consolidation phase shorter term. The weekly chart has made a peak E/A, and at this point, I'm still going to consider that the MACD and stochastic are very strong. My preference is to think of it as A, but I have no choice but to say maybe it's a continuation pattern, and we'll have to just see what happens at 2213 to 2210. That's going to be the key support. The next thing is that the monthly chart is still very strong in leg C. And as I said last night when I was at the meeting for the Investors Business Daily and the Boston Investors Group, lovely turnout, really nice to see so many tigers, so many people who listen to TFNN, which is really quite exciting. We went through just a whole series of different things, showed how my contention was that the dollar was taking a breather and that gold should be having a really nice bounce, but more importantly, it would be gold stocks based on the GDX and the gold stocks themselves that were doing very nicely over the last couple of days, and that bonds should kind of follow. But I'm treating this more as a digestive phase for the dollar before it moves back onto the upside. Okay, now what we're looking at here is the E-mini 120-minute chart is liable to test the low that was made at the close yesterday of 2242.25. That was the low. The close was just a tad above that. My thinking is it's going to make a low below that for a D, and then we'll see what happens in the 120-minute chart. More importantly, let's just go straight to all the numbers because it's the end of the year. We want to be looking forward to what I believe is coming up in the first quarter of 2007. And yes, in the Dan Yao spoke yesterday of MUX. We did an analysis of it, and I said to start a position, I believe, right there. And it's look at that. The low was down in the 266 area just a couple of days ago, and now it's at a high today of 334. It's trading at 326, and this is, I always forget, it's McEwen Mining Inc., MUX, trading at 326, up 28 cents, up almost 10% on the day. I got a sad story to report. I did that yesterday. I'm going to repeat it today. It was about NG. I had a whole analysis for my subscribers. You know, I'm doing this webinar course, and the whole thing with the last one on Tuesday, the 10th of December, I was discussing how it's so important to get price movement. You want the stochastic. He has the window with the stochastic, and I said it's got to go above 20%. You need price movement. Look at this. I keep moving it up. And you want the MACD to cross positive, which it's doing. And then when we put the whole thing together, you want a really positive outlook. And I timed it so that we bought it at $4.02 on the 28th, $4 on the 27th. The low was $4.02. It had actually traded much higher earlier in the morning, but I was determined to get it on a pullback. And then yesterday, can't believe this. I'm going to cry. I said, we're going to add to the position at 412, but we're going to have a stop at 408. And as I did that, for some reason, I don't know what it was, I think I was a little nervous that the dollar was actually quite strong yesterday and that there would be a deeper pullback. And if I was wrong, it would gap down today. Instead, what happened is there was a spectacular move to the upside yesterday after it got us in at 412 for the second position, took us out at 408 because I said to stop on all the position, and now it's up at $4.68, trading right at this moment at 462. It happens. I mean, what can you do? We are fortunate in that we have another position. This is up maybe 15%. We have another one that's up about 11 or 12%, but it would be nice to have had them both. Wouldn't that be nice? Anyway, that was the lesson that I had. Everything was described beautifully, except I should have taken the lesson and say, you got in beautifully at a low. Try to keep that low and then use the second position you could put the stop in. Why would you want to get out the first position? Oh. All right, let's get back to our story. So now we want to look at the dollar. I'm sorry, at the Dow. The Dow, which I believe is one of the leading indices right at this particular moment because of the mix of the financials, meaning that if the financials pull back here, because I think that yields are going to have a little bit of a dip after being so strong, that would suggest that we're looking at a situation where the financials, 5 of them in the Dow, could drag the market down a little bit. So now, instead of being the stronger of the indices, I think the Dow has the potential just on a near-term basis, talking about a week or two, to pull back, have a breather. Everyone will think, oh my God, it's the same as January of last year. This is terrible, terrible, terrible. I think it's going to be, there are just too many people that miss buying. I think it's going to be more a breather, a refresher, a re-energizer, refueling. All right. So what we're looking at here is we've got the Dow down 1 at 19,831. That 20,000 level is going to be there. There's just no question about it. But what I was mentioning last night, and I've mentioned here before, is that once the news, they reluctantly start saying the Dow's at 20,180, the Dow's at 20,300. Once they start mentioning 20,000, this is going to make it look like a real bull market. And I also had a mention yesterday, I usually don't talk politics in this. I do talk the politics of politics, but I don't talk about politics and who to vote for, anything like that. But I did mention that it's ironic that the person who took no credit at all, or hardly ever, or reluctantly took credit, didn't take credit for one of the greatest bull markets we've had, President Obama. Are we going to see someone now who's going to take credit for every 10-point move up in the Dow? And that's going to be interesting. And then we're going to be looking at, is this the period coming up, not next week or 2 or 3 or even next, maybe even year? Is this the period where we start to say, hey, this market is going to get so overblown that when it comes down, it's going to look really bad. But we'll deal with that when the time comes. Meantime, looking out, what we're looking at in terms of the monthly chart, in leg D, until you make a lower low, in other words, it'll take the whole of January not to break above 19,987.63. 1 penny above, that extends leg D. The very satisfying thing is that in the basis of the Chapman wave methodology, we're always looking for 4 higher peaks. That's the crux. That's the core, the kernel, the germinal theme of the Chapman wave methodology, and we're only in leg C in the S&P. I'll continue with this overview, and we'll get to some questions, but I really would like this to be much more an overview. What we've seen, what I do expect for the coming at least 3 months. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So, yes. So before I take calls, if there are calls, I want to finish a couple of things here. So the S&P has now got a down arrow, which implies that there's a sell signal. The arrow really implies that there's a sell mode. But we did get a very strong close under the 9 EMA, and the MACD and stochastic are very poor right now. So I do feel comfortable saying it is a sell mode, and that's just a description. It doesn't say, oh, sell mode, that means it's going from the S&P is going from 2248 down to 2148. It just means that's the direction. And what we're looking at here is that the weekly chart, it's the second week so far that it hasn't been able to break above the doji high of the 16th at 2277.53. There was another technique that I used, which is called the Chapman Wave 2-bar reversal, and that says unless there's a decisive close above the high, in this case of 2277.53, which will continue the sideways to choppy action. It will just broaden the upside a little bit and the downside a little bit as a kind of a cone, expanding cone formation forms. In the meantime, back at the ranch, when you go through all the stocks, at least the stocks that I've gone through over the past week, and if you continue, right in the den was exactly my next move, because I wanted to show you why this is so important. The SMHs made a huge leg E to the upside within the Chapman Wave inside track repellent resistance area at 74.34 yesterday. If there is a decisive close today and tomorrow below 72.50, the 9-period moving average, I'm going to have to put a down arrow. And I'm going to have to say the daily is in a sell mode. The weekly is still in leg D. I have to wait. And you can have that happen, that the weekly actually doesn't even get to a sell because the daily takes time rather than price, but it does use time. But in the meantime, it'd be most important. We spent about a little time last night talking about the SMHs. I think that the SMHs are fabulous looking out. Shorter term, I think they're just overbought. I mean, it's just too many stocks to say that. Mostly that I think the upside is somewhat limited, but the downside could be time, maybe not price. That's the way I'm looking at it right now. More importantly is the bank index. So as I'm doing this, I'm kind of doing a review. I kind of want to free think here. That's what I do when I do my own work, and it just takes me anywhere I want to go, because those happen to be very important aspects that I'm looking at. And 93.44, 93.48, you see that peak E there? I'm reluctant to do this today. At this point, I want to wait to the close, but I would not be surprised if I'm getting a sell signal to an immediate upgrade sell mode by tomorrow afternoon at 4 o'clock in the BKX index. And all it's saying is that there's been a fantastic move to the upside. We might use more time than price. It says the upside in the KBW Bank Index, the Keefe Brewett Bank Index, is somewhat limited. The KRE, which we looked at the other day, which is the regional banks, went to a slightly higher high, but it's the same pattern. Look at the MACD and stochastic. Mostly the MACD is way down, way lower. The stochastic still at 84%. So the BKX is not quite as strong as the KRE, the SPDR S&P Regional Bank Index. And at this particular point, this is leg B, and that's really positive for 2017 in the monthly. Like the questions I had during the break was, in the weekly charts, is my preference now, am I leaning, I'm going to lean a little bit, am I leaning towards an A rather than an F in the weekly chart of the Dow? Am I leaning to rather an A than an E in the S&P weekly chart? And all I can say is at this particular point, I'm leaning that way, but I need to see a little bit more downside in the day before I can even discuss the weekly. What's really important is that the monthly says we should still make higher highs in the first quarter of 2007. There should be at least a D to come. Now, wait a minute. We're looking at the QQQ series. At this point, the QQQs are down 0.28%, a little bit deeper than some of the other indexes. I've got this as a potential G. Within the context of the waveform, there's no other way that I can count it but the leg C in the weekly chart. And I'm suspecting that we're going to have more emotional trauma being discussed on this pullback because of the replication that there might be a mirror image of last January where there was a really sharp decline. My thinking here is that we're going to have an initial pullback, then try to stabilize, maybe drop a little further, and then we'll see, is there now enough energy to go on to higher highs in starting mid-January, let's just say. All right, that's my thinking right now. If you look at the IWM, it has concluded the daily at peak C1, C2, and the IWM, which is the Russell 2000, is actually holding a little better than some of the others, but it's really a sideways move. MACD and stochastic are very poor in the daily. The weekly chart is pulling back, but it's still pretty strong. I'm suspecting that 135, we can go to the 132s, the 9-period moving average, and then we'll see what happens. We were long, we're out our long position in the Dow, we're out the long position in the IWM, and we're actually in a short position via the volatility index. How long that'll last, I'm not sure. Okay, now what I want to do is to look at the IYT, which is the iShares. This is the iShares Transportation Average ETF. It's in leg D to the downside, made a peak F top, right there with that beautiful doji candle. I just love when you get indicators. That's the reason why I use candles rather than the bar charts, because I'm only looking for highs and lows. It doesn't make any difference to me. But what's really important is the characteristic of the candles, and the characteristic says that that doji candle right there on the 9th of December at 171.16, why don't I type that in? 171.16 and 12.916. That was the high. Make it red because that always says we're in a down mode. Okay. And now the down arrow, and that suggests that this area of the 160 to 158 could be tested. 160.60 is the 9-period moving average. I think it might take that out. Takes a bit of a breather. Let's continue. Question, Basil, when you analyze IYT, can you make a falling axe projection in daily, weekly, monthly? Falling axe? Oh, yeah, from the daily. I can, absolutely. But I've drawn it in right there. And that's what is a falling axe? It's merely, I'll have to give nicknames to the indexes that I have. That'll guarantee you that you never get into the book of indicators. Nobody's going to put a falling axe into a book of indicators. But if you say there's a declining, expanding cone with lower highs and lower lows, that'll get in. And that's exactly what this is. And it suggests that we will be coming down. The only way it's going to turn into a one-to-one to the upside is if the IYT closes at 167.20 to 167.80 in the next week, and then I'd be able to consider. Right now, I still think it's on its way down. And the monthly, yeah, we've already got that expansion. Let me just show you how it works. It goes like this, from there to there, and then we expand it. I'll be back and we'll discuss this as soon as we get back. And we'll talk about gold, which is doing very nicely. We'll be right back after this important message.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I just had a couple of questions, actually, about Chapman Wave methodology. Mr. Bull asked me about the weekly chart of the QQQ series, and I can't place exactly where the Phantom B is. A, oh, 119.51, 109.54, so it's not there. This is the way I've got it notated, and I'm pretty convinced that that was a peak F and a pullback and started a brand new buy mode. I should put an up arrow. I'm going to put an up arrow. So I'm not quite sure if I'm getting it. If you've got a date, just give me the date, and then we can work from there. But in the meantime, let me show you what I've got. In the weekly chart of the QQQ series, you've got your low of 94.84 the week of the 12th of February of this year. And it went to a peak A, a huge move up to 111.44. Then a pullback, chop, chop, chop. And then at a trough B back in July, it started a brand new move. I've got that light green is the Chapman Wave 1-to-1 parallel move. It means in the same number of bars, in the same angle, you want to see a move that would be 1-to-1. Well, it did it within 1 bar. It was 1 bar early. It came in 1 bar late. But I've got A, B, right at 119.22, right, 117.97, sorry, in the week of the 19th of August. Then peak C, then a D, then an E and an F, and it pulls back sharply. And then it starts brand new A, because you have to wait for the trough before you can get the A. That's what I said to my subscribers and to my people who are doing the Chapman Wave 3-part webinar. There's still time if you want to get in. You'll have the 2 of them archived, and you'll have the 3rd one coming up Tuesday, January the 10th at 6:30. So what I'd said is in the TVIX, which is what we actually own, that's the 2 times long, the VIX index. And I said here, I gave the chart this morning, I said, that cannot be an A because you have to wait for a trough. It needs it. Now I can take that A, I can put it there. So that's correct. This A failed because it went to a lower low. This, because there's now a higher low bar, says, hey, that's a trough. I can identify that as a bottom. Not the bottom, but a bottom. And look what's happened. It's gone to a leg A. This is with the MACD. And now with the whole thing together, the full conglomerate, it's gone to a very powerful leg A. Of course, that trading at 918 is up about 12 or 13% from our entry point. But it's the VIX index. At any time of the day, you could have a move to the upside. And this thing could drop from 917 to 850 in like blink of an eye. So we'll see what happens in that case. All right. So I just wanted to explain that. So Mr. Bull says, my chart is a little different. Okay. Now, there are times where we have, it just doesn't happen often. And I really like TradeStation over the decades that I've had it, TradeStation, from when it was supercharged to TradeStation. I found that the data invariably is very, very good. Yeah, there are times when they're different. But for some people, they'll get a little peak where it's funny how in the end it does work out. You will get to the D and maybe I'll get to an E, but we'll get to some kind of a top. It just works out that way. It's the same thing with the futures. Sometimes some 1 hour charts or 2 hour charts start not at 9:30, but they start at intra evening. So that happens once in a while. So this is what I've got, and I feel very comfortable saying I believe this is leg C in the weekly chart, which says that the low that was made in November at why is that moving? At 113.45 should not be taken out in any decline. That's the reason why I'm calling this a shorter-term breather, even if it turns out that it's a bit scary at certain times. Let's go to Brent in Martinez, California. Brent, how are you?
I'm doing well, Basil. Nice to talk with you again. I just wanted to start by thanking for all that you do every day for us, and I wish you and your family a Happy New Year.
Back at you, and let's make 2017 a really healthy, if we can, and a successful year.
I think it can be, yes. And that's all up to us, to the healthy side of it anyways, to take care of ourselves.
Correct. So you'd like to look at?
I'm in a number of these stocks. I've been accumulating. Quickly, I just wanted to relate one story. I heard you talking about Nova Gold. I had something similar happen to me in this one you're going to look at, Harmony, where I bought in at 214. I had to stop at 204, got stopped out, but I was able to buy back in lower at $1.95. So
Good.
It did work out okay, but it does happen, and that's why it's good to use the stops. It can keep going the other way.
It's always upsetting when you miss a very nice move. I have found over the years that the stops are what have saved us. Yeah, we have nickel and dimed for some losses, but when they work out well, it just more than makes up for it. I just find that that's a little bit more comfortable. For my own purposes, I'm prepared to take greater risks sometimes. But for when you have a news data, you just don't want somebody sitting there with like a 20% loss. It just sits on your head, and it just, no matter how well everything else does, that's the one that just bugs you. So I 2%, 3%, sometimes a little more, but mostly small losses. And I like to, if I can, let the gains accumulate. So you want to look at Harmony, and you've had a little story. But in the meantime, Harmony, and let me explain what I'm looking at. I am not yet. I'm close to being able to put an up arrow in. At this point, I still put the plus sign to say that you've got all the technicals. Let me show you. I'm going to go to the chart that I use now. I'm using this much more often as demonstrations for subscribers. Here's the naked chart, and it shows it's taken out all the left side peaks for the past couple of weeks. It has a couple left, and at about $2.48. Is that what it is? $2.46 is the high of the 28th of November. Once it clears that, it's pretty much taken out all the resistance levels that you can see visually. Now the stochastic has had a beautiful move up. It's gone from the single digits to 55%. Now I'm using the red line. That's the slow-moving average. And if you look at the MACD, look at these. I love when the MACD's faster-moving average, called the 9-period differential, is way above the slow red line, because that distance between the two moving averages, the greater that it is, the more powerful the move. And I like to think of the stochastic as the torque. That's first and second gear. And then the MACD takes over and takes you into all the other higher gears. But what's really important is when you put it together, on the right is this chart, and this chart says, look at the 0% line, nice big moves in the gap between the MACD's fast-moving average and slow-moving average. You've got the on-balance volume, that blue line, beautiful V-shape turnaround, and you've got the support levels of the 7-period smooth-moving average and the 9-period exponential moving average way down to the 211. So this is a very nice move. So that even if there's a sudden pullback in gold, first of all, the gold stocks will still hold up because they tend to do better than gold itself. But as soon as they do pull back, it says to you the candle of today, the entire candle says that yesterday's high is probably really good support within 4 or 5 cents of yesterday's high on any serious pullback in the next 2-3 days. I don't think there will be, but that's what I'm looking at. So that's on the daily. But what's really interesting about Harmony is that the weekly chart just touched today in one foul move. It went from way below to touching the 9-period weekly moving average. And then I'll tell you, I don't have to tell you because you've probably seen it, the history of this 9-period moving average as a resistance. So can you hold on a sec?
I sure will, Basil. Thank you.
Great. We've got Brendan Martinez, California, and we're going to be looking at Harmony's 9-period exponential moving average when we get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're with Brent in Martinez, California. We're looking at HMY trading at $2.34, up 16 cents. And what's really important about this, there are a couple of things going on. The 9-period moving average since that peak G top that was made back in August, the week of the 5th, at $4.87, pulling back to the recent low of 3 weeks ago of 186. What we're looking at is that 9-period moving average, once it broke down the week of the 19th of August, it was nicked once to the upside on September, the week of the 9th. Then again, it closed for just one time. That was the week of the 4th of November. That, I think, had to do with the election. And then it just went plunging as the dollar went screaming higher. And it plunged down. And this is the first time it's touching. And there's a sort of a rhythm to it. But what's really interesting is this is the first time that the stochastic, although it's flat at 6.19, and that's a little concerning here. I like the fact that it's trying, with another day to go, to try to close above, and the level we're looking at would be about $2.40, $2.41. It needs to close above that, and that'll be the first time that it's closed above the 9-period moving average, with a flattening MACD and the stochastic at least improving a little bit. So one of the things that I discussed last night, and there was a young lady, she had EGO, which is Eldorado Gold, and I said, yeah, this is a very nice pattern. But one of the things that I'm looking at is based on the dollar, based on the action and reaction of the dollar at these higher levels, bumping into resistance, just like the general market is. I'm thinking that it's going to be time that's used up on the dollar side, and that in the interim, and the question was, how long did I think this, if there is going to be a rally in gold, how long did I think it would last? And my answer was, at this particular point, I'm thinking 2 to maybe 3 weeks. A lot can happen in 2 to 3 weeks, because you can see the move on a percentage basis going from 187 or something like that in Harmony to 233 right now. That's it's about an 83% increase. So the percentage gains from very low price stocks could be very big. But my thinking is it's going to turn, and I drew this in. I can't remember which chart I did it in. I think I did it in the GDX. Yeah, I started drawing in the arch formation, the lowercase h that can turn into a lowercase m, so that I think that because it's sort of an inflationary look that we're getting into a window of inflation. I think that's part of the gold move here. My thinking is that gold, a chunk of the move down has been made, and it's going to be more time and some price to the downside. But my thinking is that when this rally is done, that gold generally will start to try to test the lows that were recently made, and it could just be using up time and energy before the dollar finally has a really good 6 to 8 or more weeks breather, and that'll give gold an even bit better move. This is kind of my thinking. So when I'm looking at Harmony, I know you like to position yourselves kind of a what-if case on the best side and what is the worst side. And the best side, if you're looking at the weekly chart, that's the 9-period moving average that it needs to close above. And actually, if you want to sustain a move for weeks, you need 2 out of 3 weeks closing nicely above the 9-period moving average. And if you're looking at the monthly chart, I don't know how this works, but look at this perfect series of trend lines that go from the high that was made May of 2011 at $15.73, and then each one of those tops, it hits it almost perfectly, and you extend the line all the way down, and where does it go to? It goes perfectly to the 2 highs of July at 472, and then slightly higher of 487, and it just touches those levels right there. It's just funny the way that works. That makes it really important, because at any time in the next week and a half to 2 weeks, if Harmony in the monthly chart starts to trade above $4.20, that's a long way off percentage-wise, but that'll be the first time it's nicked and broken this very long-term trend line. So that's the positive side. And the other side is that a chunk of the move has just been done, and maybe it'll take its time getting to the 250 area, 255 area, and then it comes back down, goes sideways, and then it has another move to the upside, slightly higher high. I think the daily chart is saying it's more like a V-shaped turnaround. Let's see how that impacts the weekly chart. Hope that helps you.
Oh, absolutely, Basil. Great analysis. Loved all the charts and your analysis of them. So just, again, have a very happy New Year, happy, healthy one, and I'll talk to you soon, okay?
Same to you and your family. Thank you. I appreciate that,
care.
Ray. Take care. Let's go to Scott in Safety Harbor. Scott, how are you?
Oh, great, Basil. I hope you had a great Christmas. It's just been fantastic here in Florida.
No, the weather you're talking about, because we are going to a cold period right now, but it's been warmer than we usually have, and that's kind of nice. I like that.
Complaining about the heat here. You know, I want to say one thing before I get the information on X. You know, the general consensus was not the general consensus, but everybody thought the market was going to crash, whether you wanted Hillary or Trump. It was going to go down. It was going to spike down if Trump got elected. So I would just tell people right now that everybody thinks the market's going to spike higher when Trump takes office. Just be a little cautious. And I tell you, I've turned 50 grand into almost 2 million, and I like to wait till the race gets started. You know, it's just a lot safer that way. So that's all I got to say about that.
All right, the very good points that you made, and I had an email just from someone who was at the meeting last night that I spoke at, who said it's very interesting that what did he say? That even Trump was talking about a crash in the market, but wait a minute, what's happened to that now? So things change, and we're just going to deal with what we've got. So your question here is going to be on USX.
U.S. deal, yes, symbol X.
So I've got USX. I did an analysis for my subscribers about 2 weeks ago, and I said, or maybe it's a little more than that, maybe it's almost a month ago, and I said, be careful. I think that the SLX, which is the steel ETF, has given me a sell signal that was on the 8th of December at 43.89, and that I expected that AKS, which is AK Steel, yep, there it is pulling back. USX, which is X symbol, trading at 34.53, down 55 cents. I think they're going to digest these gains, but from the monthly chart patterns, I think these are back in the running in about another 2 weeks, maybe, or 3 weeks. So just off the radar right now, the question was, I almost had X as a short, And then I said, wait a minute, one of the best in the group, I want to be rather have a mindset that says, where do you want to buy it rather than short? I don't want to have to switch my mentality around. So I think that US Steel could, in fact, go down to 31.45 is the 9-period moving average. But first, if it might struggle trying to hold on to 33.30 to 32.70. But if it takes that out, then I think you're looking at time, and it says to me, time and a little bit more price. I would not be surprised if after hitting 39.14, it comes back down to the low 32, 31 area. That's kind of what I'm thinking right now. So I hope that helps you.
Thank you, Basil. Have a happy New Year.
And a happy New Year and a wonderful 2017. May you repeat your 2016 successes, Scott.
Oh, I hope
we'll
so.
be right back, Dow's. I hope so too. The Dow's down 11 and S&P's down 2. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, we're back. So now the remaining few minutes, let me do a couple of things here. So the sectors that were the best, the steels, the financials, the semiconductors, I'm going to be watching them real closely, because I think in the monthly charts, those are still the ones that are going to come on strong. Within the context of the dollar, and it's going to be really important, the dollar, you remember, this is the period where I introduce, once again, whoops, wrong chart there. This is where I introduce our friends Dolly, Vixie, Bondi, and Goldie. That's the dollar, bonds, gold, and the volatility index. And the market generally has moved, I've spoken about this for a few years now, generally been moving in the direction of the dollar. Not always, but there are times where I like to look at it as there's a compatibility, not symbiotic, but at least a compatibility. And with this particular point, the dollar looks like it needs to have some kind of a breather. Could be time, could be price and time. And as a result, you're looking at gold, and I'll look at the TLT in a moment. Gold in a very strong leg C, or improved tremendously. Now it's up $16. Earlier on, it was only up about $5. And this is very nice action, but it's already in leg C. So is this the start of a bigger move? Well, the weekly is going to tell us. And the weekly chart says that the 9-period exponential moving average, let me just raise this. I did this very quickly. I always like to go to the ictus of most importance. It would have been a peak, but it's not. There's no peak until way up there in the 1340s. So this is the 9-period moving average at 1183. So that's where I'm looking to see, that's where dollar finds some strength, has a bit of a bounce. This is going to be very important. Gold is the area du jour right now. I like it. It's acting very well. That's gold and silver, obviously. Now let's look at crude oil. Crude oil is the sector that's just chop in a sideways pattern. It too has helped the market when it's been higher. It's managed to see the market turn around to the upside. I think there's a little divergence going on here. Crude oil is having its own little momentum thing within the rectangle, and it's even tighter now. I'm going to say 55 at 53.88. It's between 55 and 56, 55, 58. Yeah, between 55 and 56 and a half is the resistance. But the support is also pretty good at between 51 and 49. And that's the way I'm going to look at it for this period. If we're looking at copper is very interesting because it hasn't been able to sustain the rally that it had. So I'm treating this as if it's telling us a little bit of a story about some building weakness or whatever. If I look at the HGX index, that is the housing sector, the Philadelphia housing sector, it looks at 240. It looks like it wants to pull back a little bit. How it holds 235 in the next week or two is going to be very important. So this is what I'm looking at. If you look at the S&P, SPX, and X, S&P is breaking its support right now. It's going to be very important. My thinking is it comes back. It's a 2247. I'm saying 200, 300-point decline in the Dow, 20, 30 points more in the S&P, and then we have to reassess. It's kind of what I'm saying. Limited upside, a little bit more downside at this particular point. And if I want to throw something into I want the EUR USD bounce coming, and there's that bounce in the H pattern. Remember that big H pattern? This is the bar that says I went under the previous low. This is the bar, monthly bar that says from here, it's really important. Closing another month below the left side low of March of 2015, very negative. Getting back in says chop, and that coincides with the dollar choppy to the downside, euro choppy to the upside on the shorter term. Hope that covers a bunch of things. So see you on Tuesday in 2017. Thank you to Tom O'Brien. Thank you to Tommy O'Brien. Thank you to Alan Steve, my wonderful engineers, and to everyone at TFNN, and to our listeners and to subscribers. Thank you for a great year, and I hope that we can do the same for next year. And have a wonderful holiday. See you next week, 2017. Oh, I like odd numbers. Let's see what happens.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.